Well, let's stay in the mining space, and Perseus Mining out with its results, declaring its first interim dividend after profit more than doubled in the first 6 months of this fiscal year. The company also achieving its gold production target for the first time. Management saying it's confident that level of production can be maintained. Let's get some detail. Jeff Quartermaine is Perseus's managing director. He joins us now live. Jeff, terrific to have you on the show. How pleased are you this result, particularly as I guess you're heading towards those production targets?
Yeah, no, look, we're clearly very pleased with the outcome. I mean, we did set ourselves the goal of getting to 500,000 ounces a year in fiscal 22 some time ago, and it's gratifying to have delivered or to be delivering at that rate at the moment, and of course, more importantly, converting it into very solid financial performance, because it's off the back of that we can continue to grow our business and to reward all of our stakeholders.
Yeah, and one key way that you can do that is by keeping costs low. How are you going to be able to keep those costs low now in this environment?
Yeah, it's a very good question. We actually, ran a little counter to the industry in the half year, in the sense that our costs have come down from where they were previously. Part of that was related to production to volume, but also too we are working very hard on the cost base of the business as well, and we've got a number of initiatives currently underway to address those sorts of issues, and so far we've been fairly successful in keeping a lid on things.
Yeah, so given you're focused in West Africa there, what are the challenges you're facing just as far as those costs, perhaps even in terms of labour, and how are you likely to increase your margins, do you think?
Well, look, I mean, certainly, labour is an issue. It's an issue everywhere around the world, and that is one area that we're working hard on. And one of the things we can do in that respect is we can look at whether we're better served to outsource some of the activities rather than having them performed in-house by expensive labour. So that is certainly an initiative that is under scrutiny at the present time. But look, we have put in place some very solid long-term contracts for the main inputs into our business, and those contracts are serving us very well at the present time.
So you've got 3 gold mines in operation now. The question is always about mine life. How long can the level of production continue, particularly when you've also outlined some underperformance at Edikan, at that mine site. So how long can that production level be maintained? What are you going to do to rectify the situation at Edikan?
Well, look, there's 2 questions in one, isn't it? Well, the target is to maintain that production level out to the end of the decade, and we believe that we're very capable of doing that based on our existing reserve inventory, plus also some outstanding results that are coming from our organic growth programs. We're currently doing exploration and properly funding it for the first time in many years since we've finished our construction program. We're working around each of the 3 mines, and we're delivering some excellent results. We'll come out with an updated resource reserve inventory following the end of the financial year, so that's in the September quarter, and I'm very confident that not only will we be comfortably replacing what we've been consuming, but in fact adding materially to that reserve inventory. So we believe through organic growth we can maintain the level going out to the end of the decade. Now, the second part of your question relating to our Edikan mine, we believe that was something of a temporary setback that occurred as we were doing a cutback into one of the best deposit actually on the tenement area, and certainly the results that we've been seeing coming through this month indicate that we seem to have put behind us many of the challenges that we saw in the first half of the year.
Jeff, how's the Aussie dollar been working for you, particularly I guess over the past half where we have seen that weakness?
Yeah, look, I mean, to be frank, we don't pay an awful lot of attention to the Aussie dollar except when it comes to reporting to the market, given that we are Australian listed. Most of our business is conducted in US dollars, so we sell in US dollars. Most of our costs are US dollar denominated, so it really doesn't impact us terribly much. I mean, obviously a low Aussie dollar makes the reported earnings and cash flow look quite dramatic in Australian dollar terms, but to be frank, we really do focus on what's happening from a US dollar point of view, and our key target is to maximise the margin that we actually achieve. And I'm very happy to say that the results that we delivered this period certainly went quite some way to do that. In fact, for every ounce of gold that we produced this half year, we produced $533 per ounce of earnings. So and that's in Australian dollars, of course, but that's a fairly reasonable outcome, I think.
Operating cash flow is up 137%. I note that just last month you bought a stake in Orca Gold. Just then, do you have anything else up your sleeve there, Jeff?
Sorry, I missed that question.
So with operating cash flow up 137%, do you have any further acquisitions? Are you acquisitive at all?
Oh no, well certainly we're looking at opportunities, and you're quite right to point out that about a month ago it must have been, we announced a foothold investment in another company, in Orca Gold. Now we're continuing to evaluate that situation, and when the board feels that they're comfortable with a full investment, then we may well move in that direction. But this goes back to the point you raised earlier on about the importance of reserve inventory and long life assets. And it is a fact that where we stand at the moment, that relative to our peer group, our reserve inventory is not as high as some of our peers, and we have some shorter life mines. So in looking at opportunities, one of the things that we focus on very heavily is how can we substantially increase the quality of our asset portfolio through introducing material reserves and mines with material mine life. So that is a focus for us, and we're hopeful that we can bring news of this sort of activity going forward.